So here are three things to know before the FOMC meeting tomorrow. What's going on, team? It's Ricky with TechBit Solutions here with a quick little market update. Wanted to make sure that you guys were aware of how it is that you can prepare for this Fed meeting that is set to take place tomorrow at 2 p.m. Eastern time. I will be live streaming that Fed meeting and the market's reaction. So if you want to watch that live stream, you have to do nothing else other than subscribe to this channel and turn on your post notifications. So let's go ahead and jump right to it. What are the expectations of this Fed meeting? So according to analysts, the 50-point basis hike is kind of like out of the table. And I'm going to explain it in just a little bit why. 50 points was one of the approaches that we were taking as of last month. But because of the last CPI data report, which is the inflation report, where it showed that inflation did not peak. Remember, we were at 8.5%, we dropped to 8.3%, and then now we're back at 8.6%. So therefore, that's not a positive notion. This is why not only did the market sell off on Friday when, the CPI data report came out, but it really got factored in, and I actually wanted to show you guys this. It really got factored into the market on Monday, and it just became so real of like how much more aggressive the Feds need to tighten up. At least that was the market's reaction to it, because this sell-off, if I'm not mistaken, this sell-off was after the CPI data report. If you guys subscribe to the channel and you guys tuned on into that live stream, we live streamed it. I mean, it aggressively sold off, and then it sold off for the remainder of the day. If I'm not mistaken, I think it was down about 10% for TQQQ. The following day, Monday, right? The following week, the next trading day was Monday. We opened up like 3 or 4% in the red. And then, again, that's just when there are so many reasons. There was so much selling pressure. It made it very easy to understand that, hey, the Feds really do need to take an aggressive approach, more aggressive than what they were taking. And again, anytime that the Feds increase interest rates, that's not good, especially for tech stocks, because that's what they're trying to do. They're trying to fight back inflation. And if all these bases or interest rate hikes that they've already done shows that it's not really aiding this inflation rate, then it means that they only have to approach it in a more aggressive rate. And this is what we're expecting for tomorrow. So the 75-point interest rate hike was really factored into the market on Monday. Today we are kind of trading sideways. I actually sent out a message to my Learn Plan Profit group, making them aware of like this almost felt like Thursday. I don't know if you guys would agree, but this almost felt like Thursday as we were anticipating Wednesday and Thursday of like us anticipating for the market to react to whatever was going to be reported with that inflation or that CPI data report. It's kind of the same thing with right now. Market was kind of sideways, and it wasn't until the aftermarket trading session that sure, it was up 2%, but it doesn't really matter, right? Kind of just trading sideways, waiting for the Feds to finally have this meeting and announce how aggressive they're going to raise interest rates. With that being said, a lot of people were asking me via Discord of like, is a 1% interest rate hike on the table? That's not factored into the market. I know the 0.75%, yes, but the 1% is not factored into the market. The 0.75% is already of an aggressive approach. I think, analysts really just want to see the Feds take a more aggressive approach and really trying to fight back that inflation, because what they've done in the past before just hasn't aided this. And I'll share my opinion in just a little bit about that. The last thing that I want you to know is just like earning reports, when a company reports earnings, the earnings reports, that's for like the previous quarter, right? That's like half of it, or really like 30% of it. What's almost more important, especially now more than ever before, and I'm sure you guys would agree, is the guidance, right? Not just about this interest rate hike, but what's their tone for the up and coming months, right? This is the question that the Feds are going to need to answer. Are you going to take a more aggressive approach? Is, a 1% interest rate hike on the table now versus, 2 months ago, it wasn't even considered. They were saying that 0.5% was going to be the most aggressive approach that they were going to take. He didn't say that it was impossible to, do it more aggressively, but that's what they said, right? Now, it's not really off the table, right? And I think that's what people want to see is are the Feds going to actually take a more aggressive approach in raising interest rates to fight back inflation? Now, again, guidance is going to be a huge thing. One of the things that I continue to scratch my head on, I've said it so many times before. If you guys look at the CPI data, and it sounds super confusing, but please look at the CPI data and you can look at what makes up that report. And I've already done a breakdown on this on my channel, but it's fuel, right? It's oil that is where we're seeing the largest rate of inflation and what they trickle down to. With transportation services, obviously transportation services are going to be more expensive, not just because of inflation, but because if there's a lack of supply of oil and these transportation services need oil to function, they're going to need to factor that into the price point so it doesn't influence or negatively influence their net margins or their net profits. Again, same thing with retail. That's, again, one of the biggest issues. Target and Walmart both announced that, and right after they announced during their earnings, is that their up-and-coming guidance for the up-and-coming earnings isn't looking very promising. And it just has to do with how expensive all these transportation services are for them. And with that being said, yeah, I mean, sure, inflation or raising interest rates and taking a more aggressive approach, I'm sure can influence this in a positive way, somewhat. But if I'm seeing that most of the weight of why inflation is so high and so much of that data is made up of just oil, I'm still scratching my head how 4 months after Russia attacked Ukraine, right? Why is there still not a solution for our oil issue? I just don't understand that. How is that not, if we can see how the CPI data is influenced by that, why are we putting all the blame on the Feds? They have no say on our policies with oil. They just, focus. All they can do is the only tool or resource that they're given is being able to raise interest rates and, of course, print more money, right? But with that being said, their job is not to make up policies for our oil issue. That's our person in power, right? That's their job. Yet we see nothing being done. That's my concern. It's sure, raise interest rates. I'm sure it will hopefully positively influence a lot of other areas that are being negatively influenced, right? But we have to take that into consideration, that oil is such a big issue as of right now. And I really don't think raising interest rates will really do much to anything with that. So that's just my opinion. Again, if you guys have any questions, feel free to reach out to me. That's going to be that first link down below. I do run a free trading group chat. I hope to see you guys in our live stream tomorrow. And friendly reminder, if you want to be able to also watch me trade live as soon as tomorrow at market open, make sure you click the second link down below and learn a little bit more about our Learn Plan Profit group and see if it's a good fit for you. I hope that it earned your thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take it easy, team.